Good morning, everyone. This is Brian Endner with your Friday, May 24th morning market commentary. As we always do, let's start off with the weather maps once again. Here we're looking at the 1 to 5 day weather map. It looks basically the same as what we've been seeing, except for the difference that if you notice on this map, for the parts of the area that get hit hardest, they did increase rainfall totals here. So coverage pretty much still covers the entire Midwest, with the hardest hit areas hit a little bit harder than yesterday's map. That's likely adding our support here that we got in the overnight markets for all grain markets. This 1 to 5 days suggests not only rains to keep planters on the sidelines, but with the heavier totals, we're probably talking about needing more sunny days after this moves through before anyone could think about making any progress. Now let's switch attention over to what should obviously be the top topic of the day, and that's the USDA's new aid program. Details on this still a little light. We don't have all the details we'd like to see, and for some people who are talking about having their prevent plant date as being tomorrow up in the Dakotas, they're going to have to make some decisions here rather quick. But what I want to show you here is a direct quote from Robert Johansson, USDA's chief economist. I think this quote sums it up pretty well. He says, "You will not receive payments if you do not plant." So while the USDA claims that their new program should not adjust planting decisions, maybe that's only half true, because this suggests if you can get any type of crop out there, whether putting in much shorter day corn or switching to beans, the payments are based on acres that you do get in the ground. So maybe this is a little bit more attractive than choosing prevent plant, which is coming up soon for quite a few areas. Let's also point out that for July corn, July, in the middle of this news so far, has maintained that winter trading range that we had established for 5 months back in late fall and winter, which for July is between 386.5 and 403.25. Let's keep those levels in mind to say that if we stay in this range, then whatever news we see probably won't have moved the market too far. And that as long as you stay in that range, trade is at least taking a sideways mindset, or maybe they're just uncertain what to do with this USDA new government program just yet. Over in beans, for this market, let's look at the 6 to 10 day weather map. Here we see, again, continued moderate rainfall. If there is any bright spot here, we could say that areas out west, North Dakota, South Dakota, Minnesota, do see a little bit of a break in the rain at least. And that's important too, because the first prevent plant dates for beans is June 10th for North Dakota, South Dakota, Nebraska, and Minnesota. So seeing that at least some break in the rains on the 6 to 10 day do cover some of those areas, obviously you're going to need a number of days of sun before you can get back out there. But June 10th, still being a ways away, some of this area may be able to get some beans into the ground or switch some corn acres over to beans before you get to that bean or prevent plant date. So we'll see how these maps look when we return on Tuesday. That'll be very important. A 3-day weekend could see a drastic change in weather maps when we return. Over to wheat. Generally quiet there. They're maintaining support. There is still talk that the good to excellent rating could be lowered on Tuesday. General conversation, quality concerns, and just the heavy severe weather could lower that good to excellent rating slightly. Wheat will need some type of support, either from continued fund buying or from a lowering good to excellent rating, because again, weekly exports from yesterday weren't all that impressive. And mentioning funds, let's say one more thing across all grain markets, that we'll see if this new government program changes their pattern. They've been short covering actively in corn and wheat, and at least somewhat in beans, so we'll want to keep a close eye on them as well. Over in cattle, not too much to say here. We still have our $2 lower cash trade. Futures had already pre-priced that in for the most part, so futures haven't decided to go anywhere this week. But let's look forward to next week and say that futures have pre-priced in what's gone on so far in cash, but we've probably used up a lot of that cushion. So whatever we get for a show list, if we get one next Tuesday, and cash trades will probably guide futures from there. Without that cushion, left in the market will say that if cash looks like it could recover next week, then we could see futures go up. And if cash looks like it's going to continue to drop, well, then instead of sideways, we could actually see the cattle move lower. So for the most part in cattle, we're waiting for next week for additional news. But that's what we have so far here on Friday. If you have any questions, give us a call, 800-551-4626, or visit us on the web, allendale-inc.com.